Hey, ladies and gentlemen, welcome back to the channel. As always, it is Nick here, back with your daily crypto news and analysis. And today we're going to be talking about Ripple and XRP and also the vast majority of crypto. So yesterday I did address what was happening around the market with, the collapses. And it seems as though the contagion effects just continue to spiral out of control, not only within crypto, but also externally as well. And we're going to be addressing it. So first off, I did include this tweet in my video from yesterday talking about how I felt like the markets were feeling like January of 2020. This was back in January. Now, a lot of people ignored this completely, and that's totally fine. But when we look back in time, I do have a few bars graphs here. Again, remember, I don't like to utilize bars graphs for like 100% certainty on things or anything like that. But what I was actually expecting on the total for the crypto market cap was something like this, where we get a test of that 200 3-day EMA, and then we would reject off of it. Now, this could have happened from anywhere. It could have happened from this point here, which would have been the most likely scenario. At the end of December, we get that Santa rally that continues on, and most people are saying, oh well, what's happening here. We get a little bit of a peak above the 200 3-day EMA. Everyone's screaming new all-time highs, or maybe something even crazier, or hey, we get back into the demand channel on the total, but then all of a sudden, boom, we get wiped out. Now, again, this is March of 2020. This is what happened during March of 2020. This is what led up to the March of 2020 drop. And if you guys do remember, this was a significant crash. This was well over, so this is saying like 57%, but if we go back in time, this was about a 64% crash back here. And from the high that we seen during 2019, this was about roughly a full 72% pullback. Now, this would have just been 57%. This would have been 57% from the level that we would have hit, which was about $1.22 trillion. And this would have been a major pullback, would have been 57%. Obviously, yes, percentages are going to change due to the higher valuations within the market. But I think that this was what we were mainly looking at. Now, what would that have looked like on Bitcoin? Well, going off the March 2020 lows, this was about a 63% pullback from the high. It's a local high here, but if you go all the way back to the high in 2019, this was about a 72% pullback on Bitcoin. Right now, if we do look at where we are at currently on the Bitcoin price chart, I know this is a little bit messy. I was updating the Patreon a little bit on a few things and addressing some levels of interest, but nonetheless, when we look at this and we address where we are at currently on Bitcoin, what we were mainly looking at as well is a very similar approach to the March of 2020 timeframe, where we start to kind of build. We build off of the support. We get a retest of that support zone. We continue higher and higher and higher, steps up, and then all of a sudden, boom, elevator down. And this would have brought us down to about like 11.3K. If we did repeat the March 2020 lows, a 72% pullback, 72% would have taken us back down to like $7,000. I don't think that that was the most likely scenario, but I do think that we could have seen about like 11K. I think that 11K was one of the most notable levels or I should say, of interest that most people were waiting for. But right now, do we need to go lower? Do we need to see, a massive capitulation wick to the bottom like everyone is expecting? No, we don't. And one thing that I would love to note is that we've been waiting for this demand channel on Bitcoin to get targeted for a while at 19.5K all the way up to about like 20.3K. And guess what? We wicked down perfectly. But can the contagion effects continue? Can we have, mass, outrage and fear and this and that? Yeah, 100%. Listen, contagion effects can happen. Things can spiral out of control very quickly. Right now, we are actually seeing Tether. I know that this doesn't look like much on the chart, but this is a significant push for a token that is essentially a peg to the dollar. Right now, this is up drastically. Trading volume also up drastically due to the fact that USDC is depegging. A lot of people are calling for a major depeg. Now, again, a lot of this does get blown out of proportion. If you look back in time, we have seen changes on the USDC valuation many, many times in the past. Trading volume up 214%, negative and positive is combined within this. but we are seeing a significant push on a lot of these stable coins. And this is because of what happened today. For those that aren't aware, I'm sure that a lot of you are, we've seen about $3.3 billion of the 40 billion USDC reserves collapse within the Silicon Valley Bank. Now, taking a step back, outside of crypto, external factors, why is this much bigger than just crypto? Well, listen, we're all sitting here waiting for price action to evolve and, for us to see, major moves to the upside. We're waiting for 30K on Bitcoin. We're waiting for the demand zone to be targeted. We're waiting for this, that, whatever. Ultimately speaking, take a step back, zoom out, and look at the macro. The craziest thing about all of this is that, for the last couple weeks, going all the way back to even November, right? Months ago, we've seen this discussion around FTX and around this and that, and we kept seeing this narrative being pushed by the mainstream media that crypto is a scam, you will lose all your money. Jim Cramer, again, perfect individual to bring up because he was pushing Silicon Valley Bank stock. Well, guess what? Here's how the second biggest bank collapse in U.S. history happened in just 48 hours. This happened, right? And it's a big deal. Like, this is a huge deal because it questions on how ugly can this really get? How bad can this really get? Because, for me personally, I wasn't old enough to really kind of understand it. I wasn't old enough to experience it fully, but I was there. I realized how big of a deal it was. But for those that were around during the 2008 event, and I know that a lot of you were, I know that a lot of you went through it. It was definitely concerning for most people because, again, you dealt with some of the. It was definitely a rough time. Let's just put it that way, right? This is mimicking that. Remember, I always say on this channel, it's a famous quote that history doesn't always repeat, it rhymes. And this is basically history rhyming. We do see here, things will get ugly. We have just witnessed the second largest bank failure in U.S. history. Silicon Valley Bank's collapse marks the largest bank failure since 2008. Just 24 hours ago, SIVB was trading at $200 a share. When a bank collapses that quickly, something is wrong. This is not healthy. And we do see from Anderson, things will get ugly. Yeah, I mean, like, listen, we don't know the systemic risk after this. We don't know how the markets are going to open on Monday. We don't know what the general public is going to do on Monday in terms of stocks. Could they sell off massively? 100%. Will it disrupt crypto? 100%. Because again, we're still tied to equities. Equities are still allowing us to, change the trajectory of the market. We need to take a step back and look at the panic levels within the retail sector. I've said it time and time again on this channel. It could be the smallest amount of FUD. I remember when we heard China banning Bitcoin, we heard India banning Bitcoin. Those statements alone, the general public overreacted in a major way. Mass sell-offs. This has a ton of narratives tied to it. This is a major catalyst for bearish price action. Now, just recently as well on XRP, right? Because obviously, mainly we talk about a lot of these tokens. XRP has been one that I've been looking at. For those that are aware, I'm looking at a possible trade opportunity on XRP where we get 32 cents or possibly even lower. What if we get down into my demand zone of 21 to 27 cents? Like, this is what I look at. During these times of uncertainty where everyone is extremely bearish and we see panic and fear boiling up, I look at buy opportunities because although, yes, I do think that we are going to see a lot more systemic risk. I think that the macroeconomic levels are rough right now. We don't know what could happen. It's unquestionable, right? Like when we look at things happening around the financial world, we know things are breaking. We know most of the global monetary system is holding on by threads. I do believe that we will see a 2008-like recession, but it's questionable on when it's going to happen. Is it going to happen, this year? Is it going to happen in 2024? I said I'm actually very bullish on crypto up until Q3 of 2023. After that, I'm risk off. Why? Because I do think that 2024 is going to be a very bearish year. I think that 2024 is going to be a big, time in the market where, most people are going to get completely shocked at what could happen. I've talked about it as well, and I've seen a lot of individuals, including Credible Crypto, actually talking about, this blow off top event where, we could possibly go to new all-time highs, or maybe we just get a little bit of a relief rally, and it's a big one, right? Maybe we go back to $2 trillion for the total crypto market cap, but after that, we experience what most would say is the worst bear market in crypto history, where we get a dot-com bubble burst and we come back down to $100 billion, or maybe we even, just come back down to like $200 billion or anywhere within this range. And guess what we do? For a couple years, we just go sideways. I always say, like, we don't need to have, a massive sell-off to shake individuals out. Realistically speaking, time, patience. Patience is a big key player. Most people can't wait. So what do? They make impulsive decisions. They make the wrong decisions. They get shaken out. But I do think that, yeah, we could see, a nice relief rally or a blow off top event. But then after that, regulations are going to kick in. We are going to see a rug pull much larger than anyone can anticipate. Because when we go over here to crypto, we're at almost 23,000 cryptocurrencies in this market. We know that 99% of those projects are complete garbage. You see new coins being added every single day that are complete trash, meme coins. I mean, look at the market right now. Dogecoin is still holding almost $9 billion worth of individuals' money. Shiba Inu holding $5.7 billion worth of individuals' money. Like, this is a problem, right? We see a big issue with this. Now, ultimately, we question on, what's going to happen? What will happen? How can we prepare, right? Well, first off, when things like this happen, when we see banks collapsing, like we did in 2008, what's going to realistically happen after that? Are we going to see ATM machines cut off? Are we going to see, fiat currency, individuals' bank accounts completely frozen? Yeah. Yeah. This is why, banks are not safe right now. Banks are not safe. This is a big warning to anybody out there that has a large amount of money in the banks. I've said it. I've said it for over a year now, to make sure that you are investing in physical assets, gold, silver. Outside of crypto, you need to make sure that you are diversified. I see a lot of people say, I will never buy gold in crypto. I'm all in on crypto. Or gold and silver, sorry. I'm all in on crypto. No. I diversify outside of crypto. I'm in gold and silver because I see a big focus point on what the central banks are doing. Central banks are stockpiling massive amounts of gold because they see what's happening. They know what's happening. Hell, they control half of this. They are the ones that are pulling the strings. Listen, bailouts are going to happen. The money printer will come back online, just like Tony Edward is saying here, Thinking Crypto One. We are seeing a big financial crisis brewing. It's building. Now, I will say, I disagree with Peter Schiff quite a bit. I don't like his viewpoint on this market, but this is one thing I agree with. A worse financial crisis than 2008 will start soon unless the Fed acts quickly to postpone it. However, a far greater US dollar and sovereign debt crisis will occur later if it does. The latter will be far more devastating for the economy and average Americans. Now, again, taking into accountability what's happening, could we see a massive melt up in the market if we see the US dollar do what I'm looking at here? There's two scenarios. It's either one, we get this massive push to the downside, a retest of, a support zone that now is flipped into resistance, and we continue to lower, or are we going to get this, drop, pump back up, local resistance, right? Local support turned into resistance, and then boom, rejection. Either way, I do think that the dollar is actually very bearish right now, right? And we were talking about this back in the beginning of February in the Discord, we were addressing the dollar. I was like, I don't know why everyone is getting so bearish on the dollar right now when it is at significant support. We ended up, boom, impulsively moving back up to 106. Now we're hitting resistance yet again on the 3-day, rejecting off of it. The reason why I look at the US dollar is because guess what? When the US dollar starts to tank massively, we start to see retail individuals go risk on, meaning they will invest into risk on assets like crypto or gold or stocks. I think that we could see a big run, but it's the idea on like we need to prepare for what happens after that big run because you need to sell in order to take profits. You need to sell in order to make sure that you have money when the big move happens, aka the big implosion. But right now, I could not tell you guys more than ever before that banks are not your friend. Banks want you to put money in so that they could utilize your money to make money. They take your money, they buy bonds, they earn a percentage on those bonds, and they give you a very small percent. 0.25% is the national average percentage. Not even 1% back on your money. That's a big problem. And right now, banks are enticing. They want to actually give more percentage on interest because guess what? When we do see a financial collapse, your money is gone. It's locked up. We've seen this in the past. Banks are like crypto exchanges. It's the best way that I could put it, right? I use a bank account to put money in and pay bills. The same way I use a crypto exchange to put money in and send it right to cold storage. Again, I don't trust any bank. I don't trust any exchange. I don't trust any controlled, centralized entity where I'm holding money in or, I'm buying. Like, this is the problem with the traditional system is most people put so much trust and security behind a bank, not realizing that the banks do not give a shit about you. They don't care about you. They just care about making money off of utilizing your money. The same way that a typical individual could take their money from the bank, invest into real estate, invest into stocks, invest into anything, and earn money on it outside of the bank being that intermediary, that middleman, taking a very large sum off of the top. So with that being said, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, turn notifications on if you guys have more free content. You guys are more than welcome to follow me on Twitter and join the free Discord down in the description below. As always, hope that you all have a beautiful day, beautiful night, wherever you guys are on this before. This has been Nick. Peace out, guys.